Start the recording. Live stream is running. Perfect. All right, so let's get started, shall we? This morning during the London session, I outlined this 1 hour bearish fair value gap with my draw on liquidity being the previous day's low, which played out perfectly. We tested the midnight level and continued lower into the previous day's low. Unfortunately, I have been stopped out on my funding pips account right at break even. Right here when we retested the new week opening gap. And right now this is looking rather interesting. Let me actually check the cumulative volume data. It's definitely bullish, no doubts about that. At this point in time, but price is not matching up with the cumulative volume data. So first of all, I want to check if we have some news today. Today is Wednesday. We don't have any news on the schedule. Also quickly want to be checking ES, because ES right now doesn't show the amount of strength that we can see or that we saw on NQ. Cumulative volume data is also decreasing as we speak. So we just want to keep that in the back of our mind. Looking at the 1 hour time frame. Let's see what we can work with. We have previous day's low sitting right here. We have 1 hour, 1 hour, 1 hour, but we don't need that at the moment. Let's try to keep our charts as clean as we possibly can. We have a 1 hour inversion fair value gap right here. And in a couple of minutes, 17 minutes to be exact, we also get a new 4 hour fair value gap close. So essentially the decision if we close above or below the 4 or inside or below the 4 hour gap. We are currently at the low of day. So we opened up essentially right here. And ever since we opened right here at 6 p.m. New York local time, all we did was essentially continue lower. That's all we've done today so far. This is our anchored VWAP for the daily candle. We see we haven't tested it once since right here at, let's say, the Asia opening. This is our weekly VWAP right here, this black line. We cleared the previous day's low. Right now we're playing with the 1 hour inversion fair value gap. Let's go to the 5-minute time frame and add some longs here. I want to see how this plays out, because essentially I know we have that 1 hour inversion fair value gap here, and ES is not lining up perfectly. That's why I'm taking a low risk trade, only $50. We have a bullish 5-minute fair value gap here. Overlapping with a inversion fair value gap. Overlapping with essentially a breaker block right here. Highest up closing candle. This is our breaker block. We could just easily cut through this. Of course, I know that, but I'm gonna take the risk here. This is our market structure shift at the low of day. And I'm looking forward to target this buy side liquidity. Where do we have it? Buy side. The next inversion fair value gap would be right here. Then we have to work our way essentially through all of these bearish fair value gaps, trying to flip them one after the other one. Right here, another bearish fair value gap. And then all the way in here, we have a unfilled volume imbalance. So let's see if we're going to reach for that with the market opening. Keep in mind, due to, well, the overnight session being pretty bearish, I mean, all we did so far was continue lower. We have a pretty big new day overnight gap right here. This is our gap. This is where we closed yesterday, essentially, and that's where we open up today. So I'm anticipating at least a little bit of this range to get filled in. And this would be the setup that could potentially deliver. So right now, all inversion fair value gaps, breaker block, bullish fair value gaps are holding up. Right now, what I would like to see would be a close above this bearish fair value gap. If we can make it, I'm happy to add to my position, targeting more buy side liquidity. This morning during the London session, I took a simple short right here. That's the fair value gap on the hourly time frame right here, like this. Essentially this high. And this low right here shaped the 1 hour time frame fair value gap. I placed shorts right at the low of the 1 hour fair value gap. We filled it in and rejected. I took partials once we formed a new low of day right here. Kept respecting bearish fair value gaps, but unfortunately, due to spread, I've been stopped out. If we look at my entry right here, we got really close to it with the new hourly opening at 4 a.m. and it was enough to stop me out at break even. I didn't want to, well, leave my stop loss where it was initially, right here at this high. So this was my stop loss. This was the 1 hour bearish fair value gap right here. We filled it, continued lower. Like I anticipated, my take profit target was the previous day slowdown here. But unfortunately, we have that, well, fake out at 4 a.m. with the new hourly opening, which has been engulfed immediately at 4:05, continuing lower into that sell side. So roughly $100 in profit I have made this morning with the London session short. Could have been more, but unfortunately stopped out at break even. But that's what it's like sometimes. Interesting question is what's happening now. Let's see, we have 30 seconds to go. Do we also have a 15-minute bearish fair value gap? Yes. That 15-minute fair value gap could be closed in 10 minutes. I'm going to follow along on the 5 and 1 minute time frame for now. Going to take a partial once we hit the daily VWAP, because we haven't hit it ever since, well, we went below it at 7:50 p.m. New York local time. We didn't close above, but we're pushing. 0.04. Let's take a partial right here. All right. Move our stop to break even. Confirm. We already cleared buy side liquidity. Cumulative volume data is on our side now. For the first time, really, above zero. Today, at least. Next target could be London session high / midnight open / weekly VWAP. So let's see how we trade here. So far, everything has been playing out very nicely. The 15-minute time frame, 1 hour time frame bullish engulfing. We have a 1 hour time frame bearish fair value gap. Right here, it would be important to mark out since we retested the VWAP now. 15-minute time frame is going to offer a inversion fair value gap, hopefully. We are going to watch this on the 5-minute time frame. That's fair value gap. 1 hour bearish fair value gap. We get a new hourly candle in 2.5 minutes, or let's say 3 minutes. Until then, let's watch and observe. That's 1 hour fair value gap where I took the shorts from earlier this morning. That's another 1 hour bearish fair value gap. This is our midnight open. Go to the 1 hour time frame here real quick. We might even get the close above this hourly. Interesting. Yeah, I don't really care about Richmond Manufacturing Index. Let's see, Wednesday. It's an orange folder, so we'll see how that plays out. I secured my profits already. Stop loss is at break even, so there's literally nothing at risk here. Yeah, the only, well, news events that can really, well, have an impact on the chart. You have to think about it like this. If you if there's a news event like FOMC, NFP, CPI, and stuff like that, the entire order book is cleared seconds before the news event drops, and therefore it's very easy for market makers to manipulate price. So whatever kind of order comes in, because there's almost no liquidity and no orders at this point in time available, price can move significantly within a matter of seconds. And because of the lack of liquidity at this point in time, that's also the reason why slippage is increased during that time. So, but it only happens during CPI, FOMC, NFP, and stuff like that. But news events like the Richmond Manufacturing Index, they don't typically have an impact like that. So if you see a setup prior to the news event, let's say here that's 9:55, and this is the news candle right here. Usually if you have your existing setup on the chart, that already tells you what's going to happen during the news event, because market makers have already set up their game plan, and we are able to tell what that game plan is essentially just by looking at the chart and seeing, okay, shorts are being trapped, we shifted market structure, we have two inversion fair value gaps, a bullish fair value gap and a breaker block below us to support price. We have a huge regular trading hours opening gap, which is not even closely filled in, not even a 50% level. There's a little trick. If you have access to the ICT all-in-one indicator, you can quickly enable that and go into the settings and show the regular trading hours opening gap. Give it a few seconds to load up because it's, well, a hefty indicator. We can see that the 50% level is sitting right here at 18,854, so still a couple of points away before we filled in 50% of the regular trading hours opening gap. If we look at price, let's just hide all the drawings for a second. And what I like to do sometimes is to invert my scale. Therefore, I simply right click on the price scale, click on invert, and look at, well, the opposite of what's currently happening. And if I see the opposite of what's currently happening, well, we have a nice trend line here. Damn, now everything's visible again. But you see the trend line. Let me hide it again. And we just broke that trend line. We have our market structure shift 2022 setup at the high of the day, if we invert our chart, of course. And all these, this entire move, entire Asia session, London session move higher could be cleared out very quickly during the New York Open. That's just my take on price right now. If we invert it, it's usually not as simple. Let's see. Let's try to hide all the rectangles. And now you might be saying, oh man, he's using trend lines. ICT told us to not use trend lines. Well, I like a good mix of, well, best of all trading strategies. And if I see a spot on trend line with 1, 2, 3 touches, I put some weight onto it, especially if we break it, or if we start to break it. because trend lines usually just mean one thing, and that's trend line liquidity. Liquidity above all of these lower highs right here along this trend line. That's usually cleared out rather quickly. Mm, 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 mm. 1 hour time frame, that's on our chart. Bullish fair value gap. And who wrote the message? Memory of tree. You basically saw zero impact at all on the 10 a.m. news candle. Moved actually more prior to the news event. Let's see. We cleared our target. We hit buy side liquidity coming from the low of the day. The question is, will we continue now, or will we actually reverse heading lower again with a fake out trend line break? I leave the regular trading hours gap on here. Let's take a look at the S&P 500. It's moving. Moved to the upside a little bit here, but still far from taking buy side. Actually about to form a new lower low compared to the previous week's low right here at 5275 roughly. So pretty far away from that on NQ. Looking at the 4-hour time frame, we successfully filled in the bullish fair value gap. We didn't close below it just yet. Of course, that could happen if we continue lower now during the next 4-hour candle. If we look at the 1-hour time frame, and quickly hide the ICT all-in-one indicator like that. We have the trend line and all that stuff. Let's put that into another folder and hide it here real quick. Looking at the hourly time frame, close below, also on the hourly time frame, this bullish fair value gap. But also note that we closed back above the 50% level after closing below it. Could be a potential sign of weakness. Good morning, Agent Smith. It's a 1-hour bearish fair value gap that we have to push through. First day, we have to extend it over till, let's just do it like this. a unfilled bullish fair value gap down here on the hourly time frame. That's all we currently need. If bullish order flow continues, we would expect it to continue off this bullish fair value gap. If we fail to hold this bullish fair value gap and the fair value gap just below, we're likely going to continue lower. $15-minute inversion fair value gap here. SMT divergence with the S&P 500. Is that still in place? Let's see. Yes, that's still in place. H. Smith, I think you're messaging in the wrong chat. All good. So far, we're still respecting the fair value gap. Same here on ES. Compared to yesterday, I mean, if we practice using the new indicator accumulated volume data, we can see now that on ES buys are being supported. So we see higher prices on the indicator, or well, higher accumulated volume data on the indicator, and higher prices on, well, the chart. The chart is actually lagging behind the cumulative volume data indicator. If we take another look at it, almost back above zero. Well, the price is lagging behind. And another example that would lead us to believe that, well, buyers are still positioning themselves, but the majority of the volume is happening. The majority of the volume is bullish. If we compare that right with the example from yesterday, where we've seen price essentially just continuing lower after the 9:30 opening. Where do we have it? 9:30 opening, we continued lower. And then this entire retracement up into this high hasn't been supported by the volume profile if we take a look at it. We opened up, we pushed higher, 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 up until here, and that's when we really started to push. But one very nice thing that I spotted yesterday, but I unfortunately didn't capitalize on it, is this divergence right here. You see that? We formed a high and a lower high. But on the cumulative volume data, we formed a higher high, followed by the market structure shift, bearish fair value gap, dump into a new low of day. So still practicing getting used to the new indicator. I think yesterday we took the setup long here into the SPY side, perfect target. Then we just consolidated in some sort of a seek and destroy range where we form, well, essentially highs and lows, and we break them every time until we fail to hold and break lower. Let's see, we're moving. We held support nicely on our bullish fair value gaps. Pips pay my bills. Let's see if we can push higher throughout this hourly inversion fair value gap that we drew up. So for a lower time frame, order flow remains bullish. If ES is going to manage to clear this buy side liquidity, NQ should be able to run into those highs up here. Well, yes, same idea essentially on ES, as long as it holds up. I mean, we still have all these bearish fair value gaps to go through, to break through. Doesn't have to happen. I took the long from down here. Stop loss being this candle's low. Main take profit target right here. Similar to what we've talked about yesterday. This move, high probability, high chance, especially on NQ, because NQ tends to move easier than ES does. You can see if we would have taken the same trade on ES, we would still be sitting here waiting. 930, 930. We actually even had bullish SMT divergence if we look at it. Higher lows on ES by forming lower lows on higher lows on NQ by forming lower lows on ES right here, 945. So while ES still chopped around here at the low, NQ already moved essentially into our target, and by the time ES was ready to move at 950, we essentially hit our take profit target on NQ. The question is, will we hit this buy side liquidity? Big if. I'd say we're right now this gray box inside the bigger gray box. This is an hourly time frame bearish fair value gap. We're inside a hourly time frame inversion fair value gap. Right now it certainly looks like buys are being supported, and we're likely continuing higher, but this could change in a heartbeat. What I do like though is trend line being broken. I want to see nice and clean closes above that. So yeah, same idea, but yeah, I don't know. Don't like lagging price. Failing to continue higher. Let's check out the volume data. Volume data formed a new high of day, where price is still lagging behind, which could present an opportunity. Also considering the fact that all we've done today is essentially trend lower. Every time we hit this trend line roughly with an eye measurement, we reject it. We have stops above all these highs, which could be run out rather quickly. Pips pay my bills. No, so far I haven't. I will do that after the stream. Pushing higher, close above the 1 hour, at least on a 5-minute time frame. We would have to wait for confirmation on the 1 hour time frame. We swept the low one more time right here. That's some more SMT divergence for you. You see that? Lower low on ES, higher low on NQ. Then the important question is, where is the money at? And this question today, at least, it's very simply answered. Money is above all these lower highs. Overnight shorts position themselves short. That's where the money is at. That's where stop hunts will be, yeah, well, reaching to. Let's see. 1 hour time frame. Still have some ways to go. 15-minute time frame. Closing at 3. Bullish SMT divergence right here. filled in the highest bearish fair value gap here on ES. Let's see, let's follow along. Inversion fair value gap. But those setups aren't my favorite kind of setups. Even though it's a 2022 model with bullish SMT divergence, we just have too many bearish fair value gaps for ES to push through before we even reach buy side liquidity. And yes, you could argue the same thing here for NQ. We also had 1, 2, 3, 4 bearish fair value gaps to push through, but NQ moves a lot quicker and more. You can see, I mean, well, yes, it's still within those fair value gaps. Just goes to show how slow ES sometimes is moving. That's why I prefer those type of setups on NQ, but even then I don't risk a whole lot on it. It will simply be due to the fact that price could essentially turn around in any of these fair value gaps, especially if we add higher time frame confluence to it. 1 hour bearish fair value gap right here. 1 hour inversion fair value gap right there. Essentially, longing into a inversion fair value gap is not my favorite kind of setup. That's why I use lower risk right there. I will be back in no time. Go to the bathroom real quick. right, the time is 10:30. We're still pushing. It's good. It's a good thing. Nice. Good job, Agent Smith. Take it slow. Oh yeah, I remember those 250k challenges have a 15k target to get funded. It's pretty crazy, if you ask me. But if you know what you're doing, it should be possible. Yeah. We had that quite oftenly here, that your issue isn't making profits, it's getting paid out. See if we hit our buy side target, move our stop to a little bit above break even, and there goes our profit target. I can relate if we look at my phase 2 funding pips account stats here for transparency. I've done very well at the beginning of it, up 51,207, but then I had a losing day, break even day, another losing day, and then I recovered, but I just tilted on that day. That's where this $1,600 loss comes from. That's 3% of my equity. Way too much. So yeah, I'm working on slowly gaining that back. So far, last week Friday, that was on my way to Croatia. Monday, I skipped Monday due to the bank holiday. Tuesday, Wednesday, so far so good. Yeah, it's a good confluence indicator, that's for sure. Like I said, there's nothing wrong with indicators. Usually a good guide. That's why I'm starting to implement the cumulative volume data. But still, well, it takes a little while to fully trust the indicator. And we're pushing. ES broke buy side liquidity. NQ is following along. Broke out of our trend line. And that's yeah, same for me. I'm not looking for the 200 points move, 200 point movements. I'm happy with, well, anything above 20 if we're talking NQ on ES, anything above 5 actually. And I think, well, we've completed that mission so far. This this New York session, this AM session, bullish Fair Value Gap right here. We took the entry into this buy side liquidity, added some buys right here on this bullish Fair Value Gap, targeting the closest buy side liquidity pool. We outlined the S with the bullish SMT divergence twice actually right here, bullish Fair Value Gap, cleared buy side liquidity. What's happening now? Well, we'll see, but I would also wrap it up here because I really want to be restricting the amount of time I spend in front of the charts. It's 10:30. We've traded for, well, what's the time actually? It's 10:30. We've traded for approximately 1 hour. I recorded the stream, I will upload it to YouTube, and that's about all you're gonna get from me today. I hope you guys understand. I mean, for me, there's no, and also for you, I think, unless you guys ask me questions, there's no additional value in me streaming for 2 or 3 hours even. That usually just leads me to, well, make mistakes and lose more. So yeah, trying to reduce that amount of time I spend in front of the charts, especially if, well, we already hit the home run for the session. So yeah, that's gonna be it for me today. Trading is supposed to enable a healthy lifestyle. Exactly. You shouldn't spend your entire day in front of the charts just to not miss out on an opportunity. It should be more like you setting your specific time window, watching for one of your setups, and once you see that setup, you strike. You have to make sure you actually engage, and well, then you're pretty much done and over with. If you keep on trading after that window, well, typically, or even if it's a loss and you keep on trading outside of your ideal timing window, the timing window that you set yourself, doesn't end very well most of the times. That's all I'm gonna say. You may be able to relate. I certainly can. That's what I'm telling you. Let's put orders into a folder and turn on the higher time frame here. So guys, are there any questions? We're almost at the weekly VWAP. Would expect some resistance here. This is our new week opening gap right here that we're currently trying to push through, and our midnight level. We didn't leave behind a new bullish fair value gap of significant size, at least on the 5-minute time frame. On the 15-minute, we might leave one behind with the next 15-minute candle close. We spoke about the trend line being broken, our huge regular trading hours opening gap, which could still be a target to fill in essentially. But yeah, for my timing window between 9:30 and 11 a.m., I am content with the profits. All right, guys, so any questions? We took the shorts into the previous day's low and also alerted them on a Discord for the VIP members. We jumped on a live stream just in time to catch longs right here. We didn't make it to the 9:30 opening, that's my fault. But, well, didn't miss out on anything. We caught the retracement, targeted our buy side target. We hit our second buy side target right here of our second entry, this bullish fair value gap right there. Outlined the S&P 500 long setup that I didn't dare to take due to all these fair value gaps, and we could simply just turn around, leaving behind some SMT divergence. What did you just message? Yeah, same for me. I really enjoy looking at the higher time frames. If I hide all these drawings, it gives you a good sense for, yeah, well, potential directions. If we look at NQ here on the 4-hour, what did we do? We filled in a bullish fair value gap. We held support on the 50% level. We have a 4-hour bearish fair value gap right here that we are likely targeting right now. So yeah, as long as we hold that 50% level based on candle closes and opens, should be good to continue higher, at least into this 4-hour bearish. Then it would be interesting to see if we can close above. The only thing that, well, I prefer actually the 1-hour time frame, because, well, it's very easy to end up in analysis paralysis, seeing longs on a lower time frame while framing shorts from the 1 hour time frame, for example, since we closed below this 1 hour bullish fair value gap, would be aiming for shorts and look for a potential short setup. But then if we go back to the 4 hour time frame, it's looking rather bullish. We cleared sell side liquidity, held the 50% level of the 4 hour fair value gap. So in my opinion, it's easier to stick to 2 time frames, especially if you're scalping. It's either the 1 hour time frame paired with the 5 minute for me, or the 4 hour time frame. If I combine both of them, things tend to get a little bit messy. And then it's just up to your personal preference, essentially. What you prefer, or yeah, what you prefer. If it's the 1 hour time frame or the 4 hour time frame. If you happen to choose the 1 hour time frame, well, you get more frequent updates essentially every hour. Your narrative could shift, while on the 4 hour time frame, well, takes 4 times as long. So I guess for scalping, 1 hour time frame and the 5 minute paired with the 15, everything below the 1 hour should be good enough for scalping. Always depends what you're looking for. If you enter on the 5 minute time frame with your targets always being at the absolute extremes, forming or breaking the previous day's high, well, 184 points is a little bit trickier. A 1% move on the Nasdaq, it's a little bit trickier to catch than simple, well, 50-point scalps. Here's the second one, another 50-point scalp, and yeah, well, rather quickly you've hit your 100-point target, depending on what your target is, of course. But you get the idea. I'm not here to swing trade. I'm not a swing trader. Agent Smith, you said the same thing. You're also not the swing trader. You're happy with small but reliable movements, and then making sure to actually bank on these, make cash with these moves and log off. That's also very important, to actually log off and come back tomorrow. Because if you keep on watching the charts, you likely miss the setup because you didn't trust it enough. The setup, maybe because there was some bearish SMT divergence and 1 hour inversion fair value gap, blah blah blah. But now we're up here, and you take the long of, let's assume there would have been a bullish fair value gap right here. You take the long and we break below it. Your stop loss is being hit. That's just super annoying because you missed out on this one, and you missed out on this bullish fair value gap entry. Now you took the third bullish fair value gap and it failed. Continued lower from here, maybe hunting these lows right there where your stop loss was. Entry right up here, stop loss at this short-term low. Takes out the low and continues to go up anyway. Well, what do you think is going to happen? You're likely going to get a little bit emotional and start to revenge trade because you missed out here, you missed out here, and then you finally convinced yourself to take the chance, or your chance, right up here on the third fair value gap. But now this one failed. Hit your stop loss down here, and after your stop loss was hit, it turned around. Likely going to revenge trade, and well, most of the time, if we revenge trade, doesn't end up, or doesn't play out most of the times, because we don't take neutral decisions anymore, unbiased decisions, due to the emotions. And then we retrace up after your stop loss is hit. We get the same setup. We have our first bullish value gap. We retrace into that and continue higher, but you're still not convinced because you just hit your stop loss. Leave behind another bullish fair value gap. We fill that in. Still not certain about it because some higher time frame stuff, and then that third fair value gap comes in after we just took buy side, and you're super bullish now. We fill it in, bounce, but we break below it and hit your stop loss again. Emotions are Very interesting. So yeah, the best way to avoid emotions is to reduce the amount of screen time and your trading time. Usually if you compare it to competitive sports or professional sports, a football or a soccer match also doesn't last for, well, the entire day. Usually lasts 90 minutes with a 15-minute break in between to give athletes a chance, a valid chance to actually perform at their best. If every soccer game, I'm from Germany, that's why I related to soccer, would last multiple hours, let's say 5 hours or 6 hours or 7 hours, it would be much harder for, well, professional athletes, soccer players, to perform at their best. Same thing with trading. If you spend 10 hours per day in front of the charts, the quality of your trades will be impacted. And well, if the quality of your trades is being impacted or getting impacted, that often correlates with your PL. And like I said, much easier for emotions to get involved, for you to revenge trade, for you to go on tilt and blow your account, all that kind of stuff. So reducing your chart time, reducing your trading time, setting specific time windows where you look forward to take trades is the way to go. For me, that's very simply between 3 and 5, so 2 hours in the morning, and then right at 9:30 and 11. 2.5 hours in the afternoon. 1.5 hours actually. Those are my preferred timing windows. We took the shorts this morning of the 1 hour bearish fair value gap with stops up here, targeting that previous day's low. Unfortunately, stopped out at break even, but at least I secured some profits. Nice trade. One trade during the timing window. And then this morning on the live stream, market structure shift, bullish fair value gap, breaker block, inversion fair value gap, where we took the long of this fair value gap down here, targeting easiest target to potentially reach, which essentially was just buy side liquidity. We had our target a little bit above that for the 2-to-1 risk to reward. Very simply, very quick and nimble. That's how you have to be to make it in this game. We took the longs of the next bullish fair value gap, with our stop loss being down here at this candle's low, targeting once again the next easiest buy side target to reach. A simple 1-to-1 risk to reward, and done. After that, not really interested anymore. Almost at the end of my timing window. Still got a little running position here. Stop losses at break even. We'll see if we hit my target right up here, essentially the London session high. Leaving it like that. All right, guys, but that's going to be it for me today for the live stream. Thanks very much for joining in. We will be back tomorrow for a London Open or London session tape reading right here on the Discord, and followed by a New York AM session live stream. Very nice trades today. I will be uploading this live stream recording to YouTube right after the stream for you to watch again if you want to. Otherwise, well, don't, essentially. But yeah, that's going to be it. Enjoy the rest of your day. Reduce your trading time and your charting time. In my opinion, is the best way to reach consistent profitability. We keep on pushing here on NQ, which is very nice, of our imaginary fair value gap. So yeah, let's see where this ends up. We already secured our trades and our profits, leaving a little runner just for the fun of it, to be in a trade. But yeah, thanks very much for joining in. Take care and enjoy the rest of your day. Bye. Until tomorrow.